معرفة.
Now let us here understand a little bit about the Musharaka Sukuk. But before we go there, we'll have to clearly understand what is Musharaka, right? So Musharaka is a partnership between two or more parties, where each party or each partner contributes capital and has a right to deal with the partnership assets. Profits are distributed as per the partnership agreement, while losses are borne in proportion to each partner's capital contribution. So let us understand how it works. Both in a musharaka, if one partner says that I'll put $50, other partner says I'll put $50, so this becomes $100, right? And this $100 are used to invest in a business. Now, both the parties can agree that, look, we are investing 50-50, but whatever return comes from the venture, let us share it 70-30, because one partner would be putting more effort, more energy to manage the enterprise. So in a musharaka, the partners can agree upon a profit sharing ratio based on their agreement. So it could be, for example, in this case 70-30. But for example, in case if there is a loss in the musharaka, for example, if there is a loss of $50, in such a scenario, both have to bear the loss equally, that is 50-50 means $25 each. So losses will be in ratio or in accordance of their investment, but profit could be in accordance of their agreement. So this is one main feature of the musharaka which we have to understand, unlike in mudaraba. Now let us understand how IOFI defines musharaka, right? Musharaka sukuk in a way. So musharaka sukuk are certificates of equal value issued with the aim of mobilizing funds to establish a new project, develop an existing project, or finance a business activity based on partnership contracts. So this is how IOFI has defined a musharaka sukuk. A musharaka sukuk, certificate holders become the owners of the project or the assets of the activity as per their respective shares, right? The issuer of these certificates an inviter to a partnership, wherein the issuer is inviting in the investors to become partner in a venture, right? While the subscribers are the partners in the contract. So this is how a contract or a partnership is created between the originator and the investors, where both contribute liquidity and invest that liquidity into a musharaka capital, and this capital is used to invest in an enterprise to generate a profit, right? And the profit is again shared between both the investors and the originator based on an agreed profit sharing formula. So this is in a nutshell how now in terms of the ownership of the assets of the partnership, the certificate holders own the assets of the partnership and are entitled to their share both in profits and losses. So this is, as I said, another important feature which we have to understand with regards to musharaka. Again here in terms of the documentation would be similar how we have documentation in other sukuk structures. So we have the capital markets documentation, which are the trust deed, which are the agency agreement, which are the other kind of agreements which are useful and important for making this sukuk instrument listed. Again, the two, three very important aspects which I have already explained, but let me again emphasize. One of the important features is that the assets of musharaka should be Sharia compliant, meaning to say the investment should be done in a Sharia compliant business activity. Second point, profit sharing ratio must be mutually agreed at the outset between both the parties, and both the parties can agree a profit sharing ratio. The third point which I was mentioning is with regards to the losses at all, if any, has to be in accordance with their investment ratio, meaning to say if both have invested $50 each, and if a loss has come, so whatever that loss is, both have to share equally. Tradability issue is important, meaning to say you cannot keep the capital of the musharaka as cash. You have to invest that capital into assets and create those assets immediately once the liquidity is received. That is important, as I said, for tradability issue, because for tradability issue you need to have a substantial portion in the form of tangible assets. So this is another important point we need to understand when we talk about mudaraba and musharaka, because in these kind of sukuks the investors directly give liquidity not against any asset, but the liquidity to be invested in some enterprise or business venture. So it's very important that this cash is invested in certain assets and immediately once the liquidity is received by the originator. So this is the second important feature which we have to understand with regards to Musharaka Sukuk. Now let us discuss about the required documentation of Al-Musharaka. There are some very important documents. Of course, like a public document is a prospectus which is issued for the investors to know about the transaction. Then you have the trust deed, which is structured because to put all the Musharaka assets under the under a trust, right? So that is another important agreement. The other important agreement is the Musharaka agreement, because this Musharaka agreement is between the originator and the SPV, which very clearly defines how the profit and loss will be shared between the partners. So investor is a one partner and the originator is the another partner. Some other important agreements are also the management agreement, because one of the partner is appointed to manage the Musharaka enterprise, and once the Musharaka enterprise is managed, whatever profit is generated, right, that profit needs to be distributed to the investors. The other important point, as we have covered in all other Sukuk structures, is that what will happen at maturity or default. So at maturity and default in a Musharaka Sukuk, again the originator, right, is obligated to purchase the Musharaka assets and pass on the sale price to the issuer, and the issuer pays back to the investor. So this is in a nutshell what happens in the end. So as I said, what happens in the beginning, how the investors pay to the issuer SPV, and the issuer SPV pays to the originator, and then originator creates those assets, right, along with its own assets, does the enterprise, and then in the end it purchases back the assets which were created from the capital of the Musharaka. So this is how the whole structure works in the Musharaka Sukuk. Now let us discuss about Sukuk Al-Musharaka. So Musharaka, as we have understood, it's a partnership structure. And again, let us take an example of same $100, and let us take the expected profit from the venture as $5, and let us consider that the term of the Sukuk is 5 years, right? So in this case, again, there are 3 stages of the Sukuk. One is at the inception, other is during the life of the Sukuk, and the third is at maturity, default, or early payment. So let's go at the inception. So at the inception stage, what happens? The investors pool the funds, liquidity, and passes that pool to the issuer SPV. Now issuer SPV has received $100. Now what issuer SPV does is that it enters into a Musharaka agreement with the obligor, and under the Musharaka agreement, what will happen is that there are certain liquidity which is placed by the obligor, and the liquidity which is given by the issuer SPV is taken, and both these liquidities are combined and pooled, and it is invested in a business venture. There is a profit sharing formula which is agreed between the obligor and the issuer SPV. Whatever assets are generated from this Musharaka, those assets, there is a trust which is declared at the SPV level, which is the issuer SPV, and the issuer SPV acts for the benefit of the investors. So this is what happens at the inception stage. Now during the life of the Sukuk, now if this life or the term of the Sukuk is 5 years, and the payment of the periodic distribution amounts or the profit amounts is 6 months, and the expected profit is 5%, which is, for example, $5 in this case, if we are considering $100 as the initial amount which has passed. So every 6 months, what will happen is that the obligor, if there's a profit is generated, passes that $2.5 every 6 months from the obligor to the issuer SPV, and from the issuer SPV to the investor. So every 6 months the investors receive a portion of the profit. In case, of course, if the profit is more than 5, then that is kept as an incentive with the Musharaka, that is the Musharaka partner who is the obligor. So this is during the life of the Sukuk. So during the life of the Sukuk, the obligor acts as the active partner, manages the venture and distributes the profit, and the profits trickle down to the investors. The last scenario, which is a stage where there is a maturity or there is a default, or in case if there is an early payment, right? In these 3 scenarios, what will happen is that the obligor, right, is obligated to purchase the Musharaka assets, okay, in these 3 scenarios for $100. When the purchase undertaking is exercised, the obligor is obligated to purchase those assets for $100, and the $100 from the obligor passes to issuer SPV, and from issuer SPV to the investors. As I said, will happen in 3 scenarios. Scenario 1, if the maturity of the sukuk, which is 5 years. Scenario number 2, if there is a default from the partners who is the obligor. Scenario number 3, if there is an early payment because of any tax event or anything, the obligor wants to prepay and close the musharaka and go out of the transaction. So these are the 3 scenarios in which the last stage, which is the maturity stage, concludes. So this is roughly how the 3 stages are divided in case of Sukuk Al-Musharaka.
معرفة.